to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence. So Bitcoin continuing to take a breather or two.
Yeah, it's taking it easy. It eased off a little bit because of GDP numbers, but it was it's just been quiet after that big run up.
Yeah,
not enough.
Let's
sellers,
take a look for a live look at Bitcoin. The CoinDesk Bitcoin price XBX index is currently trading just below 39,180 right now, trading pretty flat over the past 24 hours, and the CoinDesk Ether price ETX index is at 2292, also trading pretty flat. The new DFX CoinDesk's DeFi index is at 494. DeFi slightly down just over 1%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. Another story we're watching is Robinhood. They're under investigation for FINRA registration violation. CEO Vlad Tenev has failed to register with the financial regulator. Emily, does this have any implications for crypto?
Robinhood definitely has implications. That many people just an on-ramp to cryptocurrency markets, for better or for worse, right? It's a very easy way for ordinary people to come and trade crypto, and it exposes a lot of new investors to the volatility of cryptocurrencies, which apparently Robinhood is trying to address through a product fix, which will be interesting to see if they can successfully do that. But yes, I mean, anything that happens with Robinhood does have serious implications for the cryptocurrency industry.
Does this relate to the markets at all, Lawrence?
No. I think in terms of crypto, no. Crypto is not particularly at the moment caring about Robinhood's IPO. That might be a different story, of course, in the actual equity markets. But when it comes to crypto, it's like, okay, great. So a bunch of retail schlubs got hosed when the price fell, et cetera. Let's face it, crypto is unforgiving, particularly on the retail. So I don't see them particularly caring. And I think what we're seeing right now, the quietness that we're seeing in the crypto markets has not much to do with that sort of issue with Robinhood, but it's more related towards sort of the macro issues. Like I said earlier, the GDP number came out. It was a lot lower than expected, 6.5 versus 8.4, which was expected. Percent for the second quarter. So it says that the recovery and the heated economy isn't happening the way that people might have thought in Q1 and even until very recently. So, maybe it's now time to say, hey, I don't know, this might be this might actually give the fiscal spending some new impetus to happen. Of course, we have that infrastructure bill agreement that's coming up. So
in other crypto news, fintech infrastructure and crypto custody firm Prime Trust is planning a major expansion of its services after a $64 million Series A funding raise. And joining us now to discuss is Tom Pageler, CEO of Prime Trust. Welcome to the show, Tom. So a lot of people don't know about Prime Trust, but you keep the wheels running for a lot of neobanks and crypto exchanges. You offer payment, settlement, KYC, and liquidity APIs that cover the full infrastructure stack for clients like Binance US, Kraken, Bittrex, and Strike. So in your words, very simply, can you explain what Prime Trust does?
Yeah, sure. Thank you for having me. Prime Trust is an infrastructure company that powers fintech and digital asset innovators. And with this announcement of our round, we're bringing our one-stop shop API stack to even more innovators. We're a regulated trust company with an API platform that allows companies to launch quickly and scale securely.
And what are you planning to do with this money? How are you making allocations?
I think, as you've seen, we experienced over 5x growth over the last year. So really, most of the money is going to go into employees, especially engineers, product leaders, and compliance folks. As you said, we do AML, KYC, Bank Secrecy Act for many of our customers. And with just the increased demand, the market, really taking off, we just need to hire more people. We are hiring, for those watching, but we do need to hire more and more. It's really about just putting more people in there and continue to scale and offer the services that our customers rely on.
So, Tom, for the folks at home, KYC, know your customer, AML, anti-money laundering. You offer different do you offer different levels when it comes to providing that to exchanges? Is there still demand for lighter levels given the kind of regulatory environment we're coming into in Washington?
Well, we're a regulated entity, so no matter what, we're going to do the Bank Secrecy Act, which is to know your customer, the anti-money laundering. Depending on the customer needs, we can do it on their behalf. We can share the information. We can integrate with them different ways. It all depends on what the customer needs. And it also depends on kind of the regulatory area of the customer. Some customers are regulated themselves and have to do it themselves. With the regulatory emphasis, it makes it actually easier. More regulation's good. I think everybody saw finance CZ saying, hey, he'll step down for better regulation, all that. I think the industry loves regulation. It just makes it more legitimate, makes it easier for us to grow and scale.
Yeah, as we're seeing now with Binance, the customers with lighter versions of KYC can only take out about a couple of $1,000s worth of Bitcoin. Is that something that you think is going to help your business?
Yeah, I think it's what you want to do is make it so that there's controls in place, everything's risk-based. You make it easier for customers to get in there, but do it securely, know who the customer is, make sure that you keep any kind of fraud out or any kind of issues. So by offering customers to get on quickly as they pass more and more regulatory scrutiny and things like that, it can allow them to do more transactions. But the whole game is to get people in there, people using the systems securely the same way any bank would, and then basically continue to grow. And as the whole market, as we see, continues to expand, we'll see more and more people in here, and we'll be able to do more and more with the whole infrastructure.
So you mentioned that regulation is considered good, and I think you're right. A lot of people in the industry do see it that way, and that it brings clarity and some sort of formality to the industry. However, recently in the past few days, we've seen U.S. lawmakers expressing what I would say are pretty negative views of the cryptocurrency industry. Right, like they're basically portraying it. There was a hearings this week in which we heard cryptocurrency portrayed as sort of shadowy and funny money and fake populism. And I guess my question for you is, how concerned are you about that trend where we're seeing U.S. lawmakers, basically expressing what probably wouldn't be positive intent toward regulating cryptocurrency?
We're not really concerned here at Prime Trust. We've hired an executive staff that has experience throughout regulatory security bodies such as the OCC, SEC, Federal Reserve, Department of Justice, U.S. Department of Treasury, Secret Service, Wyoming Banking Division, and working for banks such as JP Morgan, American Express, PNC, Bank of America, and Visa. All of that relied on a repeatable, very clear process. So as lawmakers talk about want to make things more regulated and make it so that there's a clear process to get into the system, track things, and understand who the players are, that is great for the industry. It's great for everybody. We want legitimate industry in here. We want this to scale. It's quicker, it's faster, it's easier. This is all great for us.
So, Tom, outside the United States, do you see other countries, is everyone trying to get on the same page and same standards when it comes to crypto, KYC, and AML? Do you think that there'll be kind of like one set standard for, let's say, the major markets? That'll make your life a lot easier, your job a lot easier, of course, but would also mean that all these exchanges will work off from the same hymnal, if you will.
I think globally we see differences in different regions. One of the ones that's probably the most clear and easiest to follow is Germany. The BaFin group there, which is their financial regulators, are doing a great job of making it very clear. So it's really easy to operate in an area like Germany. As you go to other countries, there's still regulatory issues coming up. It's not very clear how to operate. At Prime Trust, we really focus on what the U.S. demands. We're a U.S.-based company. So if anybody is coming from a foreign country or anything like that, you can operate here as long as you can pass the necessary requirements that the U.S. regulators put on us.
So if crypto companies do have trouble with getting the licenses and the regulatory approvals needed to run their businesses, they go to Prime Trust. Is that correct?
Yeah, Prime Trust, as I said, we're a one-stop shop. We've been actually in the space since 2013. We started in the crowdfunding space. We got into crypto a little later. That makes sense. Crowdfunding is the Reg A, Reg Ds, Reg CF, Reg crowdfunding came after the Jobs Act. It's basically digital representation of fractional shares of a company, similar to the way crypto will be handled. So we've been in the industry a very long time. We're regulated out of the division of banking here in Nevada. We're fully licensed trust. We're audited by Nevada. That's what we offer. So if someone comes and builds into our APIs, they get the proper regulatory requirements through. It's a regulated entity. They're able to operate on our rails. That's the exact play that we're doing. And as I said, we've been around since 2013 in digital assets, so it's helped us to have a pretty deep history in this space.
So, Tom, of course, we're hearing a lot about KYC issues in stablecoins or the lack thereof in some cases. Do you see that as a growing business for you guys? Do you think that there'll be demands for more KYC? I mean, obviously, you're going to say yes, but realistically, do you think that that's going to make a big difference? What do you see happening there?
We've been in stablecoins since pretty much we entered crypto. We do believe that, again, regulation is good. I think that you'll see kind of a crackdown a little bit more to make sure there's probably stronger auditing of stablecoins to make sure that there really is a one-to-one. They actually have the assets backing the coins. I think that'll continue to happen. I think that's a great thing. Obviously, as a trust, any customer that we work with, we ensure that the funds are there that back the coins. Anything that's minted, there's a one-to-one. That's all what we do as a trust company, that we have to do that.
All right, Tom, we got to wrap it there, but thank you for joining us and congratulations on your raise. Regulation is certainly a hot topic.
Thank you. Thank you for having me.
Right, that was Prime Trust CEO Tom Pageler. Coming up, checking in on Asia and the crypto markets update with GSR Markets. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, July 29th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Coming up, crypto mining investment outside China booms. India's government admits it collects no data on crypto exchanges. And the number of new crypto investors plummet in South Korea. Let's get you up to speed from Asia to the world. First up, crypto mining investment outside China continues to boom. China-based Bit Mining is expanding its operations in Kazakhstan with the purchase of 2,500 Bitcoin mining machines for a cool $6.6 million. The company says it expects the machines to increase its total hash rate capacity by around 165 petahashes per second. Now, 1 petahash, by the way, is equal to 1 quadrillion hashes per second. The company already has almost 4,000 machines running in Kazakhstan, with a further 4,000 awaiting deployment. Meanwhile, Genesis Digital Assets has announced a $125 million equity funding round to support its expansion plans. The cash came from UK-based private equity fund Kingsway Capital. The cash will be used to purchase equipment and build new data centers in the United States and the Nordic region. Genesis Digital Assets currently has a Bitcoin mining capacity of 2.6 exahashes per second. That's about 1 quintillion hashes per second. And it says it expects to double that capacity in a year. A further 5.5 exahashes per second will be online by then. Meanwhile, India's government admits it has no idea how much money is swirling in crypto exchanges or even how many investors are in crypto in India. The admission came from India's finance minister, Nirmala Sitharaman, in response to parliamentary questions on crypto exchanges. The minister was asked if the government has information on the number of crypto exchanges operating in the country and how many investors are using them. According to the Business Insider, Sitharaman's response was that no such data is collected by the government. Crypto exchange CoinDesk told Forecast News they're not surprised by the admission, but the government should sharpen its intel as it considers policy.
I think right now the government is in the phase of understanding what is the best way to regulate. My sense is that government will soon or basically should start working with the exchanges and try to collect this data. As an exchange, we are more than happy to share whatever information we have in the system so that the government can get to know the exact numbers.
Gupta says they do not have any regular contact with the government right now, and without any relevant data, it would seem difficult for the government to find the best way forward for its currently stalled discussion on crypto legislation. And onto the markets now. Bitcoin trading flat and hovering just under that psychologically important $40,000 mark. That's as of 4 p.m. local Hong Kong time today, at the end of a positive Asian trading day, following the Fed's move to retain its accommodative monetary policy. And in the top 10 for cryptocurrencies, Polkadot up almost 2%, while potentially some profit taking over Ripple, down almost 3% after the surge it saw in the wake of its on-demand liquidity, or ODL, to serve the $1.8 billion Japan-Philippines remittance market. And finally, the number of new crypto investors in Korea has apparently fallen off a cliff. The number of investors joining the 4 largest exchanges, Upbit, Bithumb, Corebit, and Coin1, went from more than 1.6 million signing up in April to just 120,000 in June. One expert told Forecast News that while the country's strict new regulations on crypto exchanges have spooked a lot of investors for the moment, we could still see some winners.
이 살아남은 거래소들은 어떤 이제 굉장히 큰 수혜를 얻게 되겠죠. 네. 왜냐하면 이 디지털 자산 시장, 가상자산 시장 자체는 앞으로 계속 커질 거라고 시장에서 보고 있기 때문에 그 60여 개 거래소 먹던 파일을 한 4개, 5개 거래소 먹는 거니까요.
All eyes remain on that crucial September 24th deadline for exchanges to comply with the new regulations in South Korea. Consolidation by regulation, it seems, in Korea. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Checking in for our live look at Bitcoin. The CoinDesk Bitcoin price XVX index is currently trading at 39,875. Bitcoin is flatlining over the past 24 hours. And the CoinDesk Ether price ETX index is at 2313, slightly up almost 1% over the day. And the new DFX, CoinDesk's DeFi index, is at 498. DeFi is down about 0.4%. And joining us now to discuss the crypto markets is Rich Rosenblum, co-founder and president of crypto trading and market maker GSR Markets. Welcome to the show, Rich. So we've seen Bitcoin between this 30 to 40,000 range. There was a bump earlier in the week, but it still seems to be range bound. Do you agree?
Yeah, I think the thing about crypto that makes it so fascinating is that even in a quiet holding pattern, we can see some excitement. The past 9 days, Bitcoin's added a third to its value, but it still hasn't really broken out. I don't know if we're hearing as much interest for it to reach new highs, and I think it's solidified its place here. I think it's unlikely we're going to see below 30 over the summer. I think we'll be, could be like a ping pong ball, but I think we'll be in this similar type of 30 to 50 range.
Good morning, Rich. We're seeing an increase in options. The option open positions, they were about $5 billion about a week ago or so. It's now up to $7 billion, obviously, with the rally. But where are the bets going? How are people positioned? These new option open interest positions. How are they positioned?
So I think that people have a recency bias. They want to bet with the momentum. I think that that's typical of retail-driven markets, but also I think that we've seen a lot of trending happening in crypto. So there was a good amount of put buying, and now more recently in the past week, post the B-Word conference, it's more been September and December $50 call buying.
So you mentioned that we're probably not going to see any dramatic price action in Bitcoin over the summer, but what do you think it would take to just bring Bitcoin back up to one of its previous highs? Like, what kind of macro event would do that in your opinion?
I think if we would have had Amazon come out and say that they do have plans, almost regardless of the timeline, to start using Bitcoin as a form of payment, I think we could be at new highs almost instantly. It's the second biggest retailer in the world, the biggest online retailer. I think if we had a bounce face from China, I'm not saying this is likely, but if it happened where China was somehow putting out something pro Bitcoin, I think that we could see a renewed highs.
And just sort of on the other side of the coin, what are the kind of more dangerous things to look out for that could bring Bitcoin's price down? Would it just be kind of like a regulatory crackdown, or what are some of the warning signals to watch out for?
I'd say it's overwhelmingly regs, especially out of China. I think there is a chance that China will say there's an outright Bitcoin ban, but at the same time, I don't think that it would mean it's completely down and out. What happens is that they'd want to take control away from the people, but doesn't mean they'd want to give control to the U.S. There's a bitter war going on, whether it's in AI, not so different than the Cold War. And I think that crypto is too important a piece of technology to have be completely escaping the country. So I think if we had that big dip, I think that it probably wouldn't be such fresh lows, because I think the Chinese military government would be buying it on the dip. I think the other thing would just be a disinterest from traditional financial players due to the volatility, and we are seeing mostly interest in the equities recently, private equity, and hasn't been as much interest in tokens. So I think if that trend continued, where there was a disinterest from the traditional financial players, that could be another reason why we'd see some extreme weakness.
So what are you seeing from institutions and how they're positioning themselves right now? I mean, we've been hearing about a lot of interest over the past couple of months. Is that continuing on, or has it died down?
There's been less interest. I'd say that much of that is due to the price pattern. It's no longer as solid and low volatility of a rally as it's been. But I don't think that means that there's no interest. If the interest is down 80%, that's still probably 5 times the interest we saw 2 years ago from institutions. A large part of that is because the space is big enough for large institutions to enter. If you want to put on a 300 million position, you could put it on relatively easy, within even a day or two. It wasn't like that 2 years ago. So I think that the capacity of the market is able to enable both entries and exit without much friction.
All right, Rich, thanks for joining us. Always appreciate your insights.
Thank you.
That was GSR Markets co-founder and president Rich Rosenblum. Coming up, tokenized stocks and stablecoins, are they just illegal securities? We ask Securitize. Plus, more regulation news with CoinDesk managing editor Nick Day. Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hello there, Nick. So, did the SEC answer Senator Warren's request for answers on their authority over crypto exchanges? Much has been made of this over the past couple of weeks.
Hey, yeah. So yesterday was the deadline for the SEC. We reached out to the SEC and we haven't gotten a response. And it's unclear to me if the response necessarily had to be public. So it's very possible that, Gary Gensler and his team did send Senator Elizabeth Warren a, response saying, outlining here's how we are viewing crypto regulation and here's what we think is needed. But we just haven't seen anything publicly yet.
Hey, Nick, the new infrastructure deal. We thought it was going to just be about choo-choos and fixing roads. Turns out there's a whole thing about crypto in there. I don't know how that's infrastructure, but so be it. They expect to raise something like $28 billion, and they have a bunch of new definitions. What's that about?
Right. So, definitely a lot of money going towards trains and Amtrak. I'm a big train guy, so no complaints here on that. But there is a provision to increase information reporting around cryptocurrencies and cryptocurrency taxes. basically, they want to make sure that every transaction is reported and taxed appropriately, and they're treating that as a pay for the bill. So basically, they're hoping to raise $28 billion by to help fund other aspects of the bill. And the expanded definitions seem to be the main cause for concern amongst a lot of the folks in the industry. It defines brokers as anything that facilitates these kinds of crypto-to-crypto transactions, which could explicitly include decentralized exchanges. But we were talking to Kristen Smith yesterday. She's concerned that hardware wallets and software developers hardware wallet manufacturers, might also fall into this definition. Meaning, you would have a huge expansion of just who is required to report what information, and then therefore what transactions are getting taxed.
Nick, Robinhood IPO, any implications for the crypto industry?
Yeah, I think the big thing to watch out for is just, what's the market, what's the actual crypto market doing, right? Robinhood has warned that, a lot of their, fortune or, whatever as it comes to crypto is going to depend on whether or not the bull market continues. And we're already kind of seeing that die down a little bit. Robinhood specifically called out, I think, Dogecoin as a key driver of its, a lot of its crypto revenue. So crypto might end up being a much smaller portion of Robinhood's revenues going forward in the next couple of months.
Yeah, Robinhood was also kind of a first mover in Dogecoin. Now there's other exchanges that offer Dogecoin, so that's going to have an impact as well.
Absolutely.
Very cool. Nick, thanks for the update. Appreciate you coming on the show.
Thank you.
That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Our stablecoins, Securities, SEC Chair Gary Gensler seems to think so, telling the American Bar Association last week that stock tokens and stablecoins backed by securities might be treated as securities under U.S. law. Joining us now to discuss is Carlos Domingo, CEO of Securitize, a digital asset securities firm. Welcome to the show, Carlos. So U.S. regulators and policymakers are increasingly sounding the alarm of private stablecoins. In your view, are stablecoins securities?
I think what they said is not that stable coins are securities, right? They said that stable coins that are backed by securities might actually be a security itself because it's backed not by a coin, like let's say by a dollar and cash assets, but by commercial paper or other things. So I think those are two different things. I think that worst comes to the worst, they can just keep the cash and or keep very, very stable, like treasury notes or things like that are not necessarily securities, and that the stablecoin can operate. I think stablecoins are a valuable part of the ecosystem. They've been growing a lot. There's companies like Circle that is going public. For us that we do digital asset securities, we also need stablecoins because we want the securities and the cash on chain to be represented in the same ledger and the same technology. So we're hoping that there will be a way for this market to continue growing.
Just to sort of elaborate on that a little bit further, though, do we really even know what would make a stablecoin a security? I mean, do you feel like that there's clarity on that? Because with a lot of securities laws in the United States, it's very confusing, right? So is the idea that a stablecoin is a security if it's backed by securities, or like how would somebody know if a stablecoin is a security or not?
That's a good point. So typically in the US, if something is security or not, is you use the Howey test, right? So you're making money because somebody else is providing, is using your money to produce value that comes back to you. Like you buy up shares of Apple, and then Apple is using that money to produce iPhones, and then the shares go up or they give a dividend. In the case of stablecoins, the investors in the stablecoins, the ones that are purchasing the stablecoins, are certainly not expecting any type of reward or value appreciation over time, right? It's actually the people that are produce the stable coins that in order to make some money, they actually take that cash and they invest it in pretty safe and conservative assets, but nevertheless securities that provide some yield. And that's a revenue stream for the company issuing the stable coin, right? So from that perspective, it's a bit confusing because it's not very clear that it has to be a security. Like when you buy some of the tokens that obviously give you like an interest or a yield or things like that because somebody else is investing that money on your behalf, that's clearly a security. But in the case of a stable coin, you're not expecting any price appreciation. So to me, it's not that clear that they are securities. And, certainly there's no regulatory clarity. This thing that we heard a couple of days ago about being securities, if the underlying cash is actually invested in other securities, that was the first time I heard that.
So Carlos, what will we see? Do you think down the road we could see a world where there are basically two types of stable coins? One which is what we expect the stablecoin to be, which is cash backed, 100% cash backed, or 97% with the rest in T-bills and what have you. And then another type of stablecoin, which is more like a security. Can the world function with two types of stablecoins operating simultaneously? Or do you think that regulators will just put a stop to the more security like stablecoin?
So in some geography, I'm in Europe now, and I was actually talking to one of the largest banks here this morning, and they were saying to me, like, look, if we create a stable coin and we cannot actually invest the underlying cash that we collect, let's say billions of dollars, into something else because they have negative interest rates here, nobody's going to do stable coins. So kind of the fact that you cannot invest the underlying money into something that produces some yield and is cash-like, but not actually just cash, it incentivizes the creation of stable coins in a scenario where, you know, interests are very low or even negative, like we have in Europe now here, right? So I think that hopefully we'll have regulatory clarity about what to do, what not to do, and then that will lead to just one type of stable coins that can actually be invested in something extremely obviously conservative, but with some sort of yield generating to cover for the cost and for the effort of the companies producing the stable coin. Certainly, you don't want somebody with a stable coin that then go and invest on, you know, stocks or on Bitcoin or something that is very volatile, right? But so far, what I've seen that companies are doing is things that are conservative, like T-bills, as you mentioned. I think Tether is very heavy on commercial paper, which is not that conservative, but nevertheless, it is pretty conservative. So hopefully they will draw the line somewhere about what to do with this cash that backs the stable coins that allows to produce some sort of yields, because otherwise it disincentivizes the creation of the stable coin itself.
Carlos, switching topics, I want to gauge your thoughts on tokenized stocks. Binance was offering them. Now they've decided not to. But to buy a fraction of Tesla's shares, say, what's wrong with that if you're giving retail investors access to something they may not otherwise be able to afford?
Well, those are clearly securities. I don't think that anybody debates whether those are securities, right? Like what we mentioned with the stable coins, there is a question of it. But those are not only securities, also derivatives, right? Because you're basically producing a derivative of another security. I think that from what I read, Binance was actually using a broker-dealer, and so does FTX in Europe. Here in the US, nobody's doing it. I think the only one that did it in the past was Abra, and they did it without broker-dealer, and they were fine. But both the SEC and the CFTC, because as I mentioned, these are securities and derivatives. I think that there's nothing wrong with that as far as you do it following the necessary regulations and laws. I think it's actually a great thing that, you know, people can buy the stock of a company in another jurisdiction where it's not being offered. And here in the US, we have something called ADRs, which are essentially the same thing, right? Like if tomorrow you want to buy shares of SoftBank, because SoftBank is not traded anywhere in the US, the only way for you to buy that is to buy an ADR, which is basically, you know, some sort of like if you want a tokenized version of the SoftBank stock that trades in the Japanese market, right? So I think this is great, and we should promote and try to do it, but obviously we need to do it following the necessary regulations. And in this case in particular, it looks like they were doing that. And I heard that the Binance basically pulled out of the market because of lack of demand, not because they were doing anything wrong. And there was a broker-dealer from Germany involved in the process. It was not just Binance as an unregulated entity doing it.
So, Carlos, I want to ask you about you're launching yield funds, right? You're a couple of them. Can you kind of go into that and what that means for your business?
Yes, so we've had an asset manager called Securitize Capital that we used in the past for some of the security tokens offerings that we've done, and then the last kind of year or so, with all the growth of DeFi and the yield generation opportunities that you get on crypto, talking to people outside the crypto space, or even people in the crypto space who are not necessarily very sophisticated, they were like blown away. But you can buy Bitcoin and get a yield on Bitcoin, or you can buy USDC and get like 8-10%, whatever, and they were like blown away. But when they look at how they need to do it, and kind of again going back to the same, the lack of regulatory clarity of whether some of these people providing yield are actually selling or not securities, on whether these short-term interest-bearing accounts are actual securities, then we figure out, well, if there's interest and this is an interesting product, why don't we try to do it in a regulated way? As a traditional security using our platform, we will issue in digital format, but it's a security at the end of the day. We have all the infrastructure to do it, and we partner with a couple of CeFi, if you want, counterparties, Anchorage and Genesis Trading, to provide the yield. And now we're working on a pure DeFi one as well that will provide different types of yields by just going directly into the DeFi world and running some yield generating strategies. So the main idea again is the same thing: is this is a great innovation that the crypto market has. So why not put it in a wrapper that provides 100% compliance and peace of mind for people that want to get exposure to those things through, traditional securities.
So yeah, I was going to ask, are we ever going to see the likes of securitized mortgages or credit card debt potentially on DeFi platforms? Is that something you guys are working on? Is that something that we could see happen in the near future?
Look, I love to do those things. Like at the end of the day, if you think about what's the beauty of, what we're doing on crypto with securities, is kind of providing access to the long term of capital markets, right? So the same way that, on internet, you can have a restaurant in a corner of a street and you can advertise through Google, which was impossible before because you couldn't advertise in such a micro way. And this enabled the long tail of advertising and long tail of, commerce and many other things. So crypto at the end of the day is kind of the long tail of capital markets, starting with stablecoins as we discussed and following with, all type of securities that you can, offer and buy and sell at a very, very micro scale, and then get access to these things that traditionally are very complicated, like, borrowing and lending of securities or, automated market makers to provide liquidity to small securities. So I think that hopefully those worlds will merge. We've certainly, from a technology perspective, we've done it and we know how it works. It's just that a matter of how to make sure we do it in a way that the regulators are comfortable, because obviously we are a highly regulated entity, as you guys know. We have a transfer agent, a broker dealer, an ATS, so we have to be mindful of not doing something we're not very comfortable with. But certainly this is something we'll love to do, and we're looking at doing in the future.
Carlos, just finally, one last question. Congratulations on your latest 40 million raise. Some of the leaders in that were Morgan Stanley and Blockchain Capital. And your platform at Securities has over 300,000 investors, as well as supports more than 150 companies. So what are you planning to do with this money? How do you plan to scale? What's the next step?
So the main thing about the raise was that last year, we actually purchased a broker dealer that has a license, also called an ATS, an alternative trading system, that will allow us to trade, private securities in the form of digital asset securities, so in the form of security tokens on the blockchain. So most of the idea behind the Series B is to move from what we're doing today, which is, a decentralized digital transfer agent, very modern, that operates on the blockchain, to then being able to then provide a trading platform, both for primary offerings as well as secondary market trading for digital asset securities, which is something that has been a huge promise of the space and where everybody got excited from the very beginning. But unfortunately, very few companies have launched, and the ones that have launched, with all due respect, but they have failed, right?
Yeah. So you're saying eventually we'll be able to trade stocks on your platform through the blockchain?
Oh yeah, very soon. But we'll be able to trade, private securities, right? So that's the main thing. The public stocks, I get the idea of tokenizing Tesla shares to sell them, I don't know, in Thailand, but here in the US, anybody that wants to buy Tesla shares, they just go to Robinhood and buy them, right? I think the part of the market that is not accessible for people is private capital markets, because that's actually where the growth has happened in the last 20 years. If you think about 20 years ago, when Amazon went public, they were a 3-year-old company and they went public at $300 million. That's it. And then now it's worth like, $2 trillion or whatever. So people made a lot of money in public markets. These days, it's the opposite. Like, Airbnb just went public recently after 16 years of being private and a valuation close to 100 billion, right? So even if they make it to 2 trillion, the upside is gone. It's been happening on private capital markets. So we're very eager on this digitization and democratization of access to private capital markets. And we believe blockchain is
very exciting stuff, Carlos. All right, we got to wrap it there, but thank you for joining us. Appreciate your insights. That was Securitize CEO Carlos Domingo. Time now to check in with Crypto Twitter with our tweet of the day. And this tweet from Parity Count Dr. Parik Patel. Thinking about earnings season, we need to have quarterly Dogecoin calls, like earnings calls, where Elon runs through his tweets over the last quarter and tells us where he sees Doge going next. He kind of already does that. All right, that's it for First Mover. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with all about Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.